All right, I'll get us going. Welcome, everyone. Thank you for joining us today for OFN's webinar, which is focused on exploring what it takes to advance a new solution, and we're drawing lessons from OFN's Innovation Initiative. I'm Nicole Sondrager. I'm our VP of Programs here at OFN, and I am joined by Holly Burrow, the CEO of Equal Business Solutions, who partnered with OFN to lead our first innovation cohort, the CDFI Capital Solutions Accelerator. I am also joined by Benjamin Van from Impact Ventures, Natasha Koss from Northern Initiatives, and Rian Irani from Next Street. And all three of them participated in our accelerator and will be sharing their insights during our conversation today. And just so you know, this webinar is being recorded and we will share it afterwards. So I'll start with a little bit of context before we jump into our discussion today. So the CDFI Capital Solutions Accelerator was a 6-month program meant to help organizations advance solutions to unlock new sources of capital and to create models that reduce barriers to flexible, affordable, and long-term funding for community development finance. The accelerator provided organizations with a framework and steps to help them work through their solutions, along with access to coaching and accountability partners and some peer feedback as well. The accelerator brought together different types of organizations who are working on solutions for the industry. And those three are joining us today. Again, like I said, we've got Northern Initiatives, Impact Ventures, and Next Street. Each of these organizations came in with an idea that was a different level of readiness or maturity. And their organizations are pretty different from each other. For example, Northern Initiative is a CDFI that launched over 30 years ago. Impact Ventures is an emerging organization, and Next Street is a mid-sized company that works with a variety of stakeholders to support small businesses. So in our conversation today, Rian, Ben, and Natasha will share about the work that they've done, the challenges that they've faced, and strategies that they've learned to advance their solutions. And so we'll start by having each of them share a little bit of information about the solution they are working on and where they came into the accelerator. Before we jump in, I want to share that OFN has opened applications for a similar program that we're offering, which is focused on financial product innovation, and that's the CDFI Financial Product Lab. My team will put some links in the chat soon, and you can feel free to check that out when you have a moment. So we will get started now. I'll pass it over to Ben first to share a description of the solution you're working on and where you were in that process when you came into the accelerator.
Definitely. Thanks, Nicole, and thanks everyone for joining and having me join you today on this long weekend, what it seems like. But Impact Ventures we're coming into our 10-year of operations. We're based out of Dallas, Texas. And we actually came in a little bit more, I would say, further along in our journey of our pilot innovation. We were in year 4 of a pilot that we started at that time around 2021, 2022. Which was really around asking ourselves the question of how do we leverage high growth equity investments or returns from equity investments to essentially subsidize our small business lending, either reducing the cost of capital for our small business lending or providing the loan loss reserve. What is very important to leverage when you talk about CDFIs and being able to leverage additional capital is having that loan loss reserve. So we come into this space very differently as a new CDFI. Because we originally came from the equity space. And so I'll talk a little bit more about how our solution kind of came, but we were kind of coming in the further along journey. But I will speak from the perspective of a grassroots kind of startup organization that necessarily doesn't have the infrastructure of maybe a larger, institution. So for those that are listening to this call, and you're in that space where it's just you started it by yourself or you and a small team, I'll be speaking from that perspective where it may not be as cookie cutter and there's a lot of messiness in the process.
Great. Thanks so much, Ben. Natasha, over to you.
Thank you. Appreciate the opportunity to be here. Northern Initiatives is a 32-year-old CDFI supporting starting and growing entrepreneurs. And the majority of our loan fund sources are typically restricted by either geography or demographics. So we set the goal to create a loan fund that would include capital that is unrestricted and flexible and can be used to support entrepreneurs across our entire footprint, which is Michigan. And we're calling it the Michigan 30 Fund. So we created this offering as an offering note to sell to individual investors and holders of donor advised funds. And the note is sold in 20,000 increments with a 0 to 2.5% interest rate over 5 or 10 years. And then in addition to the note, we're also asking for a donation in the amount of around 10,000 of the total investment to cover our operational costs. So we entered the cohort a little bit further along. We had already done our feasibility study and had just approached the board about it and get board approval. But we came in piloting this to raise $1 million by June 2026 and 10 million by December 2027.
Hey, thank you, Natasha. Rian.
Thanks, Nicole. Hi, everyone. Rian Arani with Next Street. For those unfamiliar, Next Street is a mission-oriented firm supporting small businesses by working with CDFIs, local governments, corporations, and other institutions on various kind of small business solutions and capital advisory related efforts. As part of this initiative that OFN facilitated, we submitted the concept for a mutual credit enhancement company for the CDFI space. And so in terms of where the concept was in its maturity, I would say very early stage, just at the concept stage. So it was an idea that we thought could really benefit the sector. And again, the idea being an industry utility that offers credit enhancement solutions to CDFIs, but is also owned by the CDFIs themselves. So think kind of mutual insurance and credit enhancement coming together to be an industry utility for the CDFI space. So that's kind of the concept that we wanted to advance. And again, we were very at that concept stage, and this accelerator helped us kind of push it forward over the several months that we kind of partnered with OFN and Equalon.
Great. Thank you, Rian. So, yes, you'll see we had Ben Impact Ventures who'd been working on something for 4 years at a scrappier, younger organization. Natasha having already done some feasibility study work, and then Rian really early stage. And sort of with that framing in mind, we'll jump into the discussion. So over to you first, Holly, to lead us.
Could you pop in the first question for me, Nicole?
Here, I'll read it for you. The first question is, we wanted to start with capacity, which is a major challenge for any organization that is trying to build something new. So can you tell us a little about how you made space to pursue this idea, and what did you need from a staffing perspective? Natasha, I see you off mute, so we'll start with you.
Sure. So our fund development team consists of myself, our CEO, and then our CEO's executive assistant. It's really just the three of us, and we're approaching individual investors, right? So this is something we've never done before. It definitely has taken much more time than we thought. I think we originally thought that this would be a pretty easy sell. But we're learning that it's more than just the ask, but it's also so much around like building a relationship with people who already do know us, but want to get to know us better. So there was that piece of it. So staff time took a lot more. And then I'm located in the Upper Peninsula of Michigan, and the majority of the investors that we're approaching are in the southern part of Lower Michigan. So it's like a 6-hour drive for me. So it would take a lot of time in terms of in terms of staff time for that, but also it was costing a lot more in terms of hotels and meeting expenses and rental cars and that sort of thing. So we're learning a lot from it, but we're realizing that it's taking much more time and it's a little more expensive than we thought.
And Natasha, do you all have specific team members that are allocating like a certain percentage of time to this, or how did you all think about that?
Yeah, in fact, it was Elizabeth Eichhorn through the Capital Solutions cohort who helped us to sort of look at that and sort of look at our Alyssa, our CEO, and my overall, sort of work plan for the year and what we wanted to do in addition. So we had to take some things off of our plate, and so she helped us kind of think through that. So, like for instance, Alyssa spends a lot of time advocating in Lansing and Washington, D.C. So a lot of that was taken off her plate and given to another staff person so she could free up a little bit more of her time to focus on this.
Great. Yeah. So important to think about. You can't do everything you were doing before and add a whole new stream of work. Rion, what about you?
Yeah, I think from our perspective, we wanted to build on some of the thinking that we'd done on some prior work with various organizations, and so we have a history of connecting dots, being ecosystem builders, and having capital advisory services at Next Street to support CDFIs. So we've had a lot of kind of experience in past as kind of consultants that we wanted to build on and view this as an opportunity to kind of advance on that work and build this industry utility. And so while we do not envision taking a stake in, what emerges, we did view this internally as something that is closely aligned with our mission, the stakeholders that we want to support, and also as an opportunity to be some part of something that could be bigger and help build it. And so we viewed it internally as something, again, mission aligned, something we can build off our past experience on, and hopefully, have a role in building it and get compensated for it, appropriately when it kind of gets traction. And so we had a small internal team that was allocated to it from our like internal business development time. And it was, just a couple of folks, including me. And it really helped that we had, the founder of Next Street really kind of championing the idea. And so kind of that really provided kind of support to continue to kind of dedicate, again, internal BD time because we're not really making, um, revenue off of it at this point. And also kind of the OF and Accelerator help provide that structure where we could, point to kind of making progress and pushing this idea forward. But it was a small internal team that we started with and building from in terms of what we can dedicate it to kind of moving the concept from kind of just concept to like a business plan.
Rihanna, I want to ask, I know that having the framework of something like a program can really help with capacity because it gives you something to wrap it around, like we have this dedicated time. How are you guys thinking about what that looks like to build this into a full-blown pilot as you move forward and making sure that it's remaining a priority and making time for that? Because that's one of the bigger challenges, I think.
Yeah, I think for us, it's, we've continued to talk to various potential funders and other stakeholders who could, continue to invest behind the idea and that are interested in, potentially funding the business eventually. And so, I think the program has helped us, push it forward, but we continue to have various, stakeholder conversations and get certain dedicated funding towards planning this, which has again helped us put hours behind it, because again this is a very kind of we're thinking pretty big over here, and it is in the concept stage, so it is I think putting one step ahead of the other and building on the momentum that we've seen so far.
Okay. Ben, how about you? How are y'all facing capacity on this work?
Yeah, so interesting about our organization is we started as an ESO. So we started primarily as an entrepreneur support organization that ran accelerator training programs. So when we talk about staff capacity and skill set and experience and alignment, it fundamentally shifted when we started thinking about how do we become this integrated capital platform that we are. today. So it really started us looking at our existing team and saying, what skill sets do we have? And looking at the budget that we have and saying, like, okay, how do we evolve from this heavily training filled department to more of this financing vehicle? And so that caused us about, I would say, so at first, I would say when we first started the pilot, so our goal was $1 million pilot. We ended up deploying 2 million from that pilot. But that $1 million pilot was me as CEO, and I was also doubling as CIO. So I was chief investment officer and chief executive officer. And so a lot of time I split a lot of my hat wearing the CEO hat, but also wearing the chief investment officer hat. And we also had an associate that worked with us at that time that did a lot of the deal sourcing, et cetera. And so for us, it was a fundamental shift because our outcomes and our North Star changed in terms of what we were valuing impact. It went from how do we go from improving learning outcomes for entrepreneurs to now improving funding and capital outcomes. So that fundamentally changed how we staffed our organization. How do we repurpose our budget? And so within the last 9 months, I would say we've been able to hire a managing director of lending. So now we have a full-time staff of 7, but we have 3 of those individuals on our lending and our investment team. So we've been able to build that capacity, but it definitely started with, one man in a truck, if you will. Uniquely, I know we'll go and get into this in the next conversation of how we kind of developed our pilot, but that was a huge part of, even as a small, nimble organization, transforming and moving kind of your North Star and getting your board on board. Because now you're not looking from a capacity standpoint of just your staff, but now you're looking at your board capacity of like, do you have the right folks on your board that can speak to financing and investing and legal and all the things that might pose as a risk versus just providing entrepreneur programs? So it really was kind of a top down all the way assessment of like, okay, if we're moving and evolving to this other line of business, what gaps do we have in our team and our capacity to meet the need of where we're going?
That's an interesting point about your board, Ben. Natasha, Rian, did either of you start to leverage your board in a different way while working on this?
Yeah, we definitely did. And it was really interesting to watch the evolution of this because when we first approached the board about this, a lot of them were saying, "Oh, are you talking like $1,000 to $5,000 increments that you'll sell these notes?" And according to our feasibility study, we were looking at very high net worth individuals, and we were going to go much higher. So it took a period of time for our board to really understand who we're approaching and how. And some of our board, they fit into that category for sure. So yes, we are in fact leveraging them to support it. Yes.
Yeah, I'll say for us, it's more so on when you're doing lending and investing, understanding the legal ramifications of state laws and when you're offering a fund and the SEC regulations, and you want your board to feel comfortable with what the direction they're moving in. And so a lot of times it's really just getting them is onboarding them as well as onboarding your staff as well to what you're doing, because you want them to make informed decisions, not just decisions because the CEO said this is the best direction. And the CEO, you always need that like checks and balances to make sure that you're looking at all angles as you proceed. So the reason, and I plus one, Natasha said this, it takes much longer than you originally think, because I would say the bulk of our first years in running our pilot was getting the structure right. We didn't know if we wanted to be a venture fund. We didn't know if we wanted to be a revolving loan fund. We knew that, and I'll talk about this a little bit, but as we go into the next question, but there was a lot of work around like, okay, what is the legal structure of this? Is it a nonprofit with a for-profit subsidiary? So a lot of times for those that are building these different types of funds, like you're going to spend the bulk of your time in that fund structure and thesis building stage. That stage is so critical because it informs everything else that you do. And you don't want to go back because you're structured the wrong way. And that was a tough tensional spot for us to create the right structure based on where we were growing to. And so that was a big part of getting the board on board, is getting comfortable with the structure that they might be not familiar with, because we had guys with 40 years of venture capital, private equity experience. We've had other, folks with real estate investing. We had some bankers on our board. But what we were doing was very new, piloting integrated capital, like this blended capital fund. And so they kind of all had to lead on each other to say, what does that look like, from a lending perspective? Why would an investor take 2%, right? If you're coming from pure market-based perspective and you're now going after concessionary impact-oriented investments, they're trying to wrap their mind around, why would someone take 0 to 2%, right? So those are the conversations we were having at the board level.
Thank you. I want to pivot us a little bit to, we're starting with these ideas that are really large and complicated. So how did you determine what piece of the idea or this puzzle you were going to focus on, right? So how do you think about piloting and scoping? Rion, we'll start with you.
Yeah, I mean, so when we started the work, we had, I think, 9 work streams outlined that we wanted to advance. So we had, product design, the risk framework, we had capitalization, we had governance, we had, organizational design, implementation, legal structure, stakeholder engagement. So we had, we organized our work across 9 work streams, and all have some linkages to the other. And but I think taking a step back, what we wanted to kind of focus on initially was just what we thought was essential, which was, primary kind of the product design and need, and then what the capitalization requirement would be to back that up. And then making sure that we have a core set of stakeholders that we're engaging with at the right time, to be able to kind of socialize the concept, because we're also trying to get buy-in for this along with a key set of folks. I think what we discovered was some of the legal and structuring elements. I think there's a lot of creativity that can go behind that, and so we kind of we did talk to folks, of course, but we realized like some of that can kind of that design, around kind of the legal structure, the reinsurance structure, etc., can be supported however we want, and can be designed however we want. And there's a lot of like flexibility in there, but we need to kind of get the fundamentals of what we wanted to, like, how we wanted to capitalize, what we wanted the ownership to look like, and what we wanted the product to look like first, and then we could design kind of the nuts and bolts of the legal structure following that. So we kind of deprioritized some of that initially, because I think one thing I've observed is there's so much like financial engineering and like legal engineering creativity that happens in the financial world, that you can pretty much make anything workable, but you need to kind of solve for the real true problems and the use cases first.
Thank you, Rion. Natasha, how about you? How did you all think about piloting and scoping what you were going to focus on?
Well, once we did the feasibility study, we identified some key prospective investors, and we knew, once we did that, then we met with the lawyers. The lawyers drew up a draft prospectus or offering note. And from that point, we basically took it to a few of the investors that we had identified, and they became sort of our champions in, helping us learn. Like, for instance, if you are selling these notes in $20,000 increments, to us, one of the investors said, that seems really low. Why wouldn't you go higher? So, I mean, each step of the way has just been constantly learning, and taking the feedback from the people we're meeting with, but also through the cohort as well. So it's been, there's different pieces of the puzzle, but I feel like we're kind of chronologically going in the right direction.
I want to double tap on that just a little bit because chronologically can be an interesting way to phrase the way that even you just described it. Like there wasn't necessarily a chronological because someone would say something and you would kind of step back and think about it. How did you decide where the stop and start points were with what when you were scoping out what does getting to a pilot look like? What does V1 look like? What does V2 look like?
Yeah, that's a really good question. I mean, we seriously just took the feedback from what we were learning in the cohort and we set the $1 million mark. And we knew that once we reached that point, that we could then focus on the $10 million mark for next year. Um, so I would say, yeah, I mean, we got a lot of feedback from the cohort to help us with that.
How about you, Ben?
Yeah. So a lot of since our pilot and scope really started in like 2020, we were in a fellowship called Boston Impact Initiative, their fund building fellowship. So a lot of the leveraging of the community and the other folks that were building funds was really kind of, I would say, workshops kind of in that space. But one of the important pieces, I think, to doing any pilot or any testing, right, is building in both metrics of success and feedback loops, right? Oftentimes we get out there and we pilot, but then it's like, well, how do you know that your solution is working? At the end of the day, if you're testing something, if you're testing a hypothesis, how do you know that your hypothesis is true? And I think that's where OFN program really came in to help us focus less on the doing, since we had already deployed the capital and we were servicing the investments. But now, what are the tracking mechanisms? What are the metrics of success to show that our theory is actually working? And I feel like that's the part that we were able to prioritize and really build and bring to the OFN community to say, we've done these things and they're really great and our investments are performing. But like we didn't take the time at the beginning to build in like, what are those metrics of success? What are the feedback loops that we build with the companies, with the portfolio to know that our solution is working? And so early on, we knew in the pilot and the scoping that there was a problem that most entrepreneurs don't fit traditional venture capital metrics in terms of growth trajectory, but they also can't walk into a bank and get a bank loan. And so we're like, how do we create a platform that we can meet the entrepreneurs where they are with this integrated capital strategy, whether it be debt, whether it be equity, and at the same time, how do we do that in a sustainable way? So that's the other piece is to any pilot is how do you make it sustainable, right? If anything about making revenue, right? As we know in the industry we're in, it's not about how much money you can make, it's about the impact, but it's also about sustainability. So those three things of like feedback loops, success metrics, and like a plan to sustainability, those are all the things that we really had to take time to really dig in deep and understand like the metrics and the economics of our fund model to make it so that our thesis and our hypothesis is true. So I will say those are the components that we had to take. And it was after we deployed the capital, right? Like after we had piloted the funds, we came back, as you said, it's not a step-by-step chronological process. It's a cycle of things change, the market changed. One of the things that happened for us was in 2020, there was a huge need and awareness around access to capital for entrepreneurs of color and women, right? Then we fast forward that to now with the explosion of AI and the interest rates, liquidity is hard for a lot of investors. So we went through two market changes of demand and supply of capital, which fundamentally changed our approach. Exactly, building the plane as you fly it. That changed our approach to our pilot, halfway through because we're like, okay, we made these investments, but we didn't predict a time where getting out of those investments was going to be, as much as a challenge as it is in the market that we are today. So we went back and pivoted and said, okay, instead of just applying straight equity, what does it look like to do redeemable equity or revenue-based financing so that we can get liquidity, but it may not be the returns that we're looking for on the venture perspective, but it's higher than a traditional small business loan. So it kind of sits in that middle on a return profile. But again, without the feedback loops, without the metrics of success, without the sustainability plan, we wouldn't have known those, we wouldn't have known how to get to point A to point B.
I love that. I love that. So let's lean into that a little bit, and I'm gonna like direction us towards gathering evidence. It's amazing when you have all these great ideas and you start testing them, but what have you learned in this process of doing this and being in these shoes, walking this walk about how to test your assumptions? What was the most important assumption that you were maybe wrong about, and how did you figure that out?
Mhm.
And we can start with Ben and go backwards again.
Good question. Most important assumption. Oh, I think we underestimated the investor appetite for what we were doing. Um, we knew, I mean, if I say I have $1 million to give out, every entrepreneur is going to come popping out of every nook and cranny, right? To get the money if it's available. But I think we underestimated the investor appetite for this type of like flexible product. And again, that right sizing, that capitalization of the fund, there's a number of factors of just like, are you a good pitch? Like, do you have a good sales pitch? Is there a market? Like, it depends on geography and where you're located and things like that. And being in a market like Texas, our first line or our straightest line to capital was banks. But we know banks are very conservative. Banks typically operate when they invest in things in a very conservative way, not the same way that you can approach a high net worth investor, right? And say, hey, take 2%, right? We're not getting the 2% deals in bank money anymore as CDFIs, right? So a lot of that we had to test out and pilot with different sources of capital in our blended capital structure. So I think we assumed that because this was new, innovative, and that there was a huge need for it, that investors would get it. And a lot of times we would go back and forth between, and I'm specifically talking to the bank community, going from their CRA, lending team to their investment banking team. Because when we would talk about deploying equity, they'd be like, oh, you need to talk to our investment bankers because that's where we deploy equity. And so we're like, no, we're deploying equity, but we're sourcing debt. So we need to talk to the CRA, CDFI lending folks. And so there was a big back and forth on that.
The problem with true
Yeah.
innovation is always that you're walking a path no one has walked.
Exactly. And there wasn't a blueprint because using BII, Boston Impact Initiative, as an example, they were very successful at this integrated capital model, but their fund was 90%, 80% individual investors, which is going to have a very different type of risk tolerance than a bank that has certain guidelines, risk profiles, compliance, et cetera. So you really had to take the time to understand who we're marketing this to, like who is the ideal investor for this type of thing. And again, that fundamentally changed the fund structure because it's no longer a pooled fund because banks didn't want their dollars pooled that were doing blind pools. So it affected the structure. So we had to go back to the structure because our investor class had changed. And so all that to say is I think we assumed too much that we could just develop the thesis, develop the fund structure, and then go out and start shopping it around, right? And not realizing that you got to get feedback from the investors and then go back and tweak, right? And tweak the model.
Super fair. Super fair. How about you, Natasha? What was an assumption that you guys made that maybe you weren't as right about it as you wished?
Well, I think first it was the actual sale of the note at the $20,000 increment, and just that was, just lower than the kind of audience we were approaching. I mean, there's been a number of things. Another example is we met with an investment management company to talk to them about, the people that they work with and potential donor advised fund holders. And they said, well, why couldn't somebody invest their IRA? And we were like, I don't know. Could they? So we go back to the drawing board and do the homework, So I feel like everybody we're meeting with, we have to like learn something, go research it, shift things, which then of course goes back to the time that it takes. This pilot is definitely, the timeline is being greatly extended at this point just because of these kinds of things.
I feel like that's the hard part is it always takes longer than you think it will. How
Yeah.
about you, Rian? What is something that you guys assumed and maybe
Yeah.
didn't hit the nail on the head?
Yeah, no, I mean, I agree with Natasha. I mean, I think the one thing from, gathering evidence, is I think you have to put in the work to identify kind of the signal from the noise in all of that evidence. Um, because we've had a lot of conversations, and I think, you'll either hear what you want from those conversations, you will hear, why it cannot be done from those conversations, or you will hear, wide agree like very enthusiastic agreement in concept or in sentiment, right? So I think taking from all those, taking from all that input, like what really matters for your implementation, um, is pretty, I would say, important in kind of the evidence gathering kind of element of your work, because you can always ask like leading questions to get the responses you want. You can describe the concept in a very kind of ambitious way, which gets a lot of interest. But then when it comes time to kind of get into the details, that's when you really need to put in the work to determine kind of and build kind of your expertise, to really, you know, take that input, but also be kind of very driven yourself by like what your, like what you are driving towards and what your expertise tells you. So that's kind of just one overarching, point. I think, one thing that I wouldn't say like well, necessarily a wrong assumption, but that kept coming up when we had conversations about a shared, so like an industry utility, which, we were prioritizing around kind of credit enhancement and mutual ownership, for a credit enhancement vehicle, is just the need for like a shared services utility for the CDFI space as well. And so that is something that came up, which I know we've it's not kind of new, a new concept, but it's something that came up when we talked about, a credit enhancement utility. And so that's something we've taken into consideration now as well, and it's kind of what that means about a potential design for what we originally envisioned.
I think I wanted to raise something too that I heard a lot is how important it is to go and talk to people, right? Sometimes we start working in our idea and within our own team, and we're like, this is the best, right? We've thought of everything. We did some desk research, but the importance of seeking out those conversations. And a lot to Rian's point, I saw it in the chat too, right? Avoiding confirmation bias, making sure you're going in with curiosity. So you're not just like staying within the bounds of what you already expected. So thank you all for those really thoughtful answers. We touched on this a little bit already, but this isn't the only thing you all or your organizations are working on. Are there any mechanisms, best practices that have helped you stay on track, or dedicate time to this work? Natasha, how about you?
Yes, definitely. We are keeping kind of I guess it's called a scorecard, and so it's a document that we're following. It has each of our potential investors in there. What are the touches they've had, and what are the next steps? Everything's going into Salesforce, all of our activities, all the conversations, and that's also an area where we can monitor where we're at. And then we meet weekly every Friday morning to talk about what we've done this week and what's on par for, or what we're planning for next week.
That's really great. Ben, how about you all?
Yeah, I mean it's baked into our daily, or I said quarterly goal setting and planning. One of the things is we refreshed our 3-year strategic plan. So getting us to 27, we outlined some key milestones that we have, and I think having that information written down allows you to have more effective conversations with funders as well, because they can kind of like benchmark their timelines. Because right now, if you think about the way funders work, they have their portfolio that they deploy capital to, whether it be philanthropic or whether that be investments, but they're looking at it from a time horizon perspective. So if you're able to kind of document that and match that up with the funder's time horizon, you can say, okay, our goal is to raise this amount by or we have a 3-year capital raise strategy and this is how we want to deploy it. So having kind of that one page, document that we've created that essentially outlines a 3-year prioritization strategies specific to our fund and lending efforts, it definitely helps the team stay on course with like where are we at in the process and where are we missing the gaps, baked all the way down to like what are our weekly metrics that we're tracking. So we have a weekly scorecard. We use the EOS model, the Entrepreneur Operating System. So quarterly rocks that go down to monthly goals and then weekly metrics. And so our fund team looks at, how many conversations they're having with funders, how many deals they're sourcing, how many deals are getting to, completion. And so that's kind of how we kind of keep things on track.
Great. How about you, Rian?
Yeah, I think for us, I mean, the accelerator definitely helped add structure to the work that we were pursuing with internal buy-in. So I think that definitely helped. I think the other piece, which was important for us is we were having several conversations with folks. Um, so like I mentioned, like we had the buy-in of like Next Street's founder who was talking to a lot of people, potential funders, potential stakeholders, etc. And so just keeping that momentum going was a pretty important mechanism for us because we didn't want to like lose those threads or lose those conversations and like have those follow-ups and keep kind of advancing the work. So just kind of that in itself was somewhat like an enforcing mechanism in terms of okay, we have this team now, we have all these people we've been spoken to, we are part of this accelerator, so let's not lose that momentum, and let's continue to kind of advance the work. So I think that in itself was a pretty powerful mechanism.
So to that point, Rian, I think let's dig a little bit into organizational culture. And in the process of doing this, innovation is a whole different way of thinking, a whole different way of functioning. Were there any organizational cultural challenges or aha moments that you guys faced while going through this journey? And we can start with Natasha.
Sure. So we are 32-year-old CDFI who's relied really heavily on primarily federal and foundation funding sources. And so we have, the managing those is really baked into our DNA and what we do. And, we've got a big accounting team. And so this is really new for us. We learned that we needed to build the systems in order to hold these loan funds. And while we thought originally this would be a statewide loan fund, we would have one loan fund source, and we'd be able to loan out the capital as the need arise with entrepreneurs. Well, many of the people we're meeting with are saying they really want to see their investments stay in a certain part of the state. And so we're having to kind of rethink that model. We obviously want to be able to, support their desires. And so we're in the process right now of building these systems, because there's going to be a 0% rate on some of them and a 2.5% rate on some, and some maybe 5 years, some maybe 10 years. Ideally, we'd love it if an investor just allowed us to revolve their investment year after year, but all of these are going to kind of look different. So we are currently in the process of figuring out what it looks like to manage potentially a lot of different fund sources. So the culture is one of learning still.
I love that. I love that. How about you guys, Rian? How has this culturally impacted your organization?
Yeah, I think similar to Natasha, I mean, we've had a culture of being kind of solutions-oriented organization, working a lot with CDFIs on their strategic plans and capital advisory solutions. And so this work was a natural kind of extension of some of that work that we've historically done. And I think one of the challenges has been or is that um, this is not it's kind of like a project that we're working on versus this is core to our business, right? Like we any industry utility or this, community development mutual that we're calling it internally, is not something that Next Street would again have ownership or run. It's something that we want to help connect the dots and build. And so this is, from our perspective, you know, building on kind of a history of our work in the CDFI space, and our culture of kind of pushing for innovation in the space with some of our clients in the past. But it is at this point kind of in an internal business development, and a project. And so it is not kind of it is not Next Street's business from a big picture. And so I think which is why for us I think that that the clarity on the momentum, keeping it going to kind of see, okay, can this be something that will gain legs and get potential funding to actually set up, and us having kind of a role in setting it up. I think that part is important to us, because as I said, it is one element of what the organization does.
For sure, for sure. Well, and I'm gonna hop to Ben, and I'm gonna preface Ben a little bit because I know that his organization was built to disrupt. So kind of coming from a different perspective, have you had any organizational cultural changes as you've gone through this journey that you can speak to? You kind of talked a little bit about how you've changed how you face goals and all of that, but how about something else?
Yeah, so I hired a managing director of lending about 9, 10 months ago. And he comes with 30 years of banking experience. And it took him 6 months to stop wearing a suit to work every day. So culturally, I'll say that is a huge win. If we can get a 30-year banker to stop wearing a suit to work every day. Um, uh, yes, it is speaking to dress code, but it also speaking to mindset, right? Of the work that we do in the CDFI space. Like it's very hands-on. It's very, non-corporate in a way, that we are building solutions, and we are responsive to the market. I think that's what it says, is that we are responsive to the markets that we serve. But I'll say one of the big shifts, other than Todd's suit, his dress that he wore every day, is that we it's not that we deprioritized our programs, but we did have to reevaluate. I would say like how the lending activity was complementary to our entrepreneur training activity. There was a moment where there was a risk around the programs team maybe feeling like their work was deprioritized because it was the new shiny object. Like it was like, oh, we're building this fund. There's a lot of capital. We're talking about millions of dollars, and everyone's attention is going towards that. But how do we still maintain internally the culture of like, this is how our work works together, right? It's like capital without the information and the education, right, is kind of a mishit. And so I think making the team understand that their work is just as important as the lending and the capital work. And one of the ways we did that is by implementing kind of a trauma-informed care support model. The University of, it was Dr. Sarah Crane. She wrote a report. She did a report and a study with a number of ecosystem leaders on the trauma-informed entrepreneur support framework. And it was really designed for ESO, so entrepreneurs, support organizations, as well as CDFIs, to implement a trauma-informed support framework, not only on how they support entrepreneurs, but also internally with how they support their staff and their team. So for us as a growing organization, that trauma-informed kind of workplace, we wanted to make sure that our values align not with just what we did externally, but like what we practice internally as well. And so we are still in that kind of an evolution process, but that really has been a key component of making sure that the culture stays intact as we evolve as an organization, because we've really flipped the model from 20%, lending and 80%, entrepreneur support, to more of like this 80% lending and 20% entrepreneur support. Rian, you mentioned how this was only a portion of you guys' work. This is the work for Impact Ventures. So that is a huge culture shift because now you're getting talent, finance talent that could go to Goldman Sachs or that could go to Bank of America. That's a different level of financial skill, a different level of benefits and culture and things that people have expectations for. And so it definitely fundamentally changed kind of how we approach supporting our team holistically.
Great. Thank you, Ben. I'll have one more for us and then we'll switch to audience questions. So after going through this experience, is there maybe a single best practice that you learned that you'll continue to apply either to this solution or future ones that you plan to pursue? We'll go with Rian first.
Yeah, I think being able to articulate the problem you're solving and the solution in a very clear, simple way is something that consistently um, has come up and is it's very hard. I mean, when you're in the weeds so much, it's sometimes helpful to take a step back and just really be very clear-eyed in what the challenges that you're solving for. So I think that's one. I think the second thing I'll just say more broadly is that I think from next year's perspective, connecting the dots, which I brought up a few times, is that one observation is there's a lot of interest in supporting the work CDFIs do from parts of the financial ecosystem that may not be as familiar with CDFIs and vice versa. So, I mean, Natasha mentioned like high net worth individuals. So there's, organizations at the intersection of climate and community. There's family offices, and there's, broader range of institutional investors. I think the challenge has been kind of how do we communicate about the work CDFIs do? How do we kind of institutionalize and structure and standardize some of the work that they do, and be able to attract that broad range of capital that is sitting there. So that's something that we've kind of come across in the work that we've been doing. And I think the challenge is again making sure that the capital flows from the large institutional investors towards CDFIs that are doing kind of the work on the ground. And a lot of it is about those pipes.
Ben, how about you? One best practice to carry forward.
Rand took the good one. That first exercise was tough, like prioritizing the problem that we were trying to solve, because it definitely got you into the weeds. It always helps to have a Mara that's gonna she's gonna hammer at you until you get it right. But having that accountability is definitely huge. I think one thing that stands out to me is asking this. Such a simple question: that how do you know that you're successful, right? I think there's a lot of times we do things for the sake of doing things, but the question always becomes like, how do you know what you're doing is right and that is successful? And I think this really brought us back to what is the metric? What is the signal? Like, what is the thing that shows you that what you're doing is the right thing? Because again, there were so many different solutions that came in this program. We all came from very different geographical locations, industry experience, and we all were convicted that our solution was going to solve the problem within the CDFI industry. So that's very unique to ask the question back to us all and say, well, how do you know what you're doing is true or successful? And I think a lot of times we get so ahead of ourselves that we don't ask ourselves that question, like, how do we know what success looks like? So that was my big takeaway.
Natasha?
I would say lead with curiosity and be open and listen. And, we have so much to learn from the people that we're approaching, about what's important to them and what they're most interested in investing in. So I would say that would be my big takeaway.
Fantastic. All right, we've got 5 minutes left, so I'll see how many questions we can get through. But I saw a really interesting question about how you mitigated risk in piloting. So for example, did you establish a loan loss, keep the loan size small, or what kinds of things did you do to mitigate risk? And it can be any of you, doesn't have to be all of you. So if anyone wants to jump in.
Well, I think since we were in year 4 of our pilot, when you are trying to operate in an environment where again, you're trying to do in the work of innovation, all the things are not going to align in the same way where you have all that you need when you're ready to do it, right? You may be operating with 60% of the things that you actually need to complete the pilot. So I think sometimes it's not a question of like, did we mitigate risk? Are we successful mitigating risk? We address the risk, but I think you do what you can with what you have. I think everyone would like to launch with a loan loss reserve and with all these checks and boxes in place, but it almost never happens like that with innovation work. Oftentimes, you have a few friendlies, friends, families, and fools, right? That will invest in your work, and that will be kind of those initial funders and investors that take a chance on you. And over time, you're figuring out the rest of the different components of it. Yes, we went into it saying like, yeah, we need to establish a loan loss reserve because equity investments are really risky, but like no one had the appetite for a loan loss, reserve fund for that. So you kind of have to operate with that, and again, kind of being comfortable with operating with like less than what you actually need to be successful.
Thank you, Ben. Rihanna or Natasha, anything you wanted to add? Okay. Well, then I will start closing us out. Wanted to thank everyone, Rion, Ben, Natasha, and Holly, for sharing all your insights. I hope that for everyone in the audience, it was helpful to hear about, either shared struggles, but also hopefully you learned some ideas and practices that you can take into your own work. I did see a question in the chat about whether OFN was going to share these lessons in some other way, and we are planning to publish a report this summer, so keep an eye out for that. And then just a final reminder that we are launching a similar experience to this Capital Solutions Accelerator through our Financial Product Lab, and those applications are open through Wednesday of next week. So thank you again, everyone, and we'll see you soon.